Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here Friday afternoon, just before the close, October 6th. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are we doing, Barrie?
Doing really well.
Yeah, what's on your radar? This is something different that we're starting. Usually we start with Bitcoin, but today I had a 30-minute ES chart that Barrie and I were talking about beforehand, and I said we got to show this, and he said, "All right, let's do it." Today we'll cover this, obviously, Barrie, and then I'll throw it over to Barrie. Barrie goes through the big five, which is ES, bonds, gold, crude oil, copper, the dollar, and the euro. Then he'll throw it back to me, and I've got some commodity shorts to update, as well as some new longs, and one of our slumbering giants finally woke up this week, which we'll cover as well. But this was I was telling Barrie, I put this on right before the announcement of the non-farm payrolls, the unemployment report this morning. I said, let's see what this thing can do. And lo and behold, look at what it did. I mean, remember, we put these points in, the X, the A, the B, the C, and then everything else, and these equilibrium lines get generated based on this Gartley pattern. So we got the low, and lo and behold, today, as we get near the close, we're getting stuck on this upper equilibrium line near the high. The thing that we were also talking about, which Barrie is religiously pounded into my head, you got to watch the higher highs and you got to watch the higher lows. Well, what did we get this morning? We had this low 2 days ago on Wednesday, and then the low today came in with a higher low. After that, the rest is history, right? You had a couple 30-minute inside bars, and then this thing took off. So the reason I wanted to show the chart is twofold. One is showing you how the geometry, plays out over time. Even though we made a lower low than yesterday's low, you can see that this was a false break. So there's that, the geometry and how it plays out. And then there's the importance of watching and just noticing, you have your reference low. Are you making a higher low or a lower low? Because then that helps sort of narrow down the possibilities or the higher probabilities that come with that higher low. Anything else to add on this one, Barrie, before I throw it over to you and we jump in?
Well, we can look at the 30-minute really quick on the square chart that we post on Twitter, on X.
Yeah.
So anyway, no, not much. It's perfect geometry. This is how they work. It's very nice.
And the idea is to find that vibration and then, and then watch how the pattern plays out. So let me throw it over to you and let's jump in. Lot of shifting going on last few days.
Yep.
Man, there was a lot of action around that ABCD completion, wasn't there?
Oh boy, was there action. I mean, talk about sit there and churn it a little bit, right? Get everybody dizzy.
And most of it was getting people bared up at that point because it looked ugly.
Absolutely. I mean, we had news, this news, that news, the other news, and everything. And then this morning, we had that big flush right before, sort of the false break. Well, here it is on the 30-minute chart that we use on X. And here we are. I think last week we looked at how the low came in. The first low, and we were looking for it to move up, but it really couldn't sort of take out the key area, which was this 43.13 level. But it started to wrap around 42.78, which we talked about, and eventually went down this morning on the news right to the 50% of the square and never looked back. Now that's what a relief rally looks like.
And a squeeze for sure.
Yeah, exactly.
But the key thing, Barrie, with your 30-minute right here, this is why you would not have been selling those lows. You would not have gotten emotionally involved and sold them because you knew it was into support on a half square, making a higher low.
Yeah, no, we wouldn't be selling this.
But a lot of people get stuck in that, right? Oh, the news is terrible. Bonds are tanking. The dollar's ripping, which was happening this morning.
So or they would look for that first rally and sell it right here when it stalled out,
Right.
And boy, did they ever get taken out.
Yeah.
So I think, well, it for us, that's why I use these squares, use the geometry, because it makes sense to me, and it's easier for me to sort of frame the markets, whatever they're doing, using squares and geometry and these degrees, using the Gann stuff. So it just makes it easier. That's all. I mean, if I was just purely running on indicators and moving averages, and you can be chopped and diced and sliced here, there's no way, unless you have a lot of really heavy structural rules in place. Anyway, let's get back to the daily. And last week we left off by talking about 4370 being the key level to watch, that we're weak under it and that we'll be strong above it. And you saw, we tapped this on the 29th. We tapped on the 29th.
Last Friday, yeah.
Last Friday, we tapped it. We talked about that. And then we said, well, if we don't take out that high, take out 4370, it's going to be weak. And
it's going to go to 4270, which is what it did.
Pretty much what it did.
Right.
And we talked about the 50% of the square, where Ben got the 4270, and that this would be the next big target, right? And we had this area blocked out for a while, because that was, if something's going to go down, it would have to happen here, whatever the combination of all this action. And pretty much that's where, if you take this block up here and you take the block down here, and if you draw a straight line, is right through our section that we kind of blocked out for the balance. So the numbers are good. And funny enough, for next week, what are we left with? Yeah, 4370 again. Talk about churning in the same, around the same levels.
Oh boy, yeah.
And so, well, you got to go with what you got. So it's 4370 really is the next level to watch. And under that, I would look for more of a consolidation, maybe with a little bit of a bullish tilt to it. Let me just take 30 minutes, just one more time. So I would say any kind of a pullback now, we really have to hold about 43.13. And this is where I get it. I didn't want to drop it on top of the daily, but you guys are watching it intraday.
So it's arranged with the top of it right around your half square, basically.
Yeah, well, top of it is like 43.13.
There you go.
And the buffer goes down to about 43.09, right in there. So we want these to hold up in this area. Now, technically, we can get down to these old highs down here, about 43.03. Sure, if that gets there, fine. But ideally, if it's strong, if this kind of a move is going to be backed up, it shouldn't get below 43.33. You know what I mean? We should hold here and then continue, because there's so much strength. Who's going to slow it down? But if this is some kind of a relief and we're going to sort of drop back down into the lower range, really, we want to watch 43.13. Anything above that, consolidation above that, I would consider that to be positive. And if we somehow break this and whatnot, at any time, it doesn't have to be Monday. We could go up higher. If we go up higher, then obviously we have to use the next level. So if we get into 43.86, then we'll probably jump to 43.45 being the level pullbacks need to hold. Okay, so just to be clear about that. And getting back into the daily, that's really it, guys. And so what happened here? What happened was we had a high that we called out, and that was a lower high on the weekly compared to the high that we got in December. And that high also had a pullback. We made a lower high, and we called that out, and we were looking for lower prices, and we got that. And as it came down into the ABCD, came down into the 50%, we were looking for the leg to finish. And it finished more or less in that same area. We weren't trying to sell this. We were looking here to cover things, and we talked about the risk that's increasing for shorts, I think last week, and definitely on X. So now we sort of finished the business here. Now we're starting to move higher. The question now, of course, is, where is it going to go? Are we going to new highs, or is this the shorter counter trend?
And I think, Barrie, that's a really good point. It's a two-step job, right? The first is to identify the end of the current move, which we've kind of done now. And then it's how quickly, based on the evidence, can you determine, okay, what's the most likely thing to happen next?
Exactly.
So
yeah,
we're in that second phase now. What happens? What comes next? And what are the key levels to look at to give us clues?
Well, 4370 is the only key level.
Mm-hmm.
Pretty bold of me to say that, but really,
That's good.
I'm sticking by it, man.
It's clarity.
It's clarity, and it's worked. I mean, you can see all through here.
Mm-hmm.
So the number is solid for this right now. These numbers they're not static necessarily. So for now, it's really the pivot. If we're below that, I can tell you the market is still on a weaker ground basis the daily. I mean, look, we're only one bar from the off the lows. So
Mm-hmm.
I'm not talking about the ultimate low. I'm talking like today's low, just one bar up. So
Right.
it's not enough. Yeah, we could do a second one, and if we can actually make air above 4370 or have the low of the day above 4370, or let's say 80% of the body of the bar above 4370 and close above, things like that. That's what I would call holding above, right?
Mm-hmm.
Like here, this price action is what you call hold above. Came down into 4370 and kind of bounced, came back. So in general,
It tested it.
it's holding above, right? So that's kind of what we're looking for. And here we did that. We came down into the half square. And we move that down here. Really, the support is down there.
Mm-hmm.
And yeah, let's go with 4370. And if we get above that, I would expect it to go up and challenge 4475 again on this round, ultimately.
Mm-hmm.
That's how much I trust this 4370. So
Sure.
let's see if it works out. If it doesn't, if we go one day, pop up, and next day we reverse and get under, well, then that's not above, right? We want to actually settle above and go. Otherwise, I would expect some kind of a consolidation between the 50% of the square and 4370, which is still a pretty wide range, right? I mean, it's
100 points.
100-point range. You can sneeze that.
Yep.
So that could be a wide-ranging kind of consolidation, or it could just tap in to sell off again. Anything's game. Anything to the downside is fair game if we can't get above 4370. That's kind of how we'd leave that.
Mm-hmm.
Okay, and once we do that, I think then upside momentum will kick in. Right now, yeah, we have some relief, but it's not we don't have a whole new trend going, right?
So just to make sure everybody's clear, if you're trading ES this week, 4370 is your key level.
Key level. It's weak below, strong above. How about that? Very simple.
Yep.
And if you guys are watching, if you guys are like actively trading, you can check X, and I post the 30-minute chart that we just looked at. And that really helps sort of frame everything, because we framed everything perfectly this week, like we do every week. Mm-hmm. And so we'll see what happened. And you can see we came up to the 43.45. We have that's 216 down from the high. You can see that kind of tapped out that point. Anyway, let's move on to the weekly, which is really the story. So we had this channel drawn. It wasn't just for looks. And what happened was, ideally, if we would have held above that line, lower line, I think the market would still have some of that robustness to the upside. You know what I mean?
Yeah.
Have that,
the animal spirits would still be running.
Exactly. It would be intact. The fact that we broke through, it's only one bar, but nonetheless, it broke through. And so I think that's a signal that we're weaker. It's on a weaker footing now. There's no question. And now we have this upward trend line, which technically we can say, as long as we're below that, the market's
negative.
So in the big picture, in the weekly level, we can say that it's weaker. Now we took out last month's low, so that's something to watch. Nothing to sneeze at. So we have to watch that. That's around 44.12. I'm sorry, 43.50. So we're right at 43.44 right now, and we pushed up into that today. So the weekly high as of now was 43.58. So we pushed right into that last month's low. Mm-hmm. And I think that's why this is sort of critical. Not only would we have to take out last month's low, but really get on top of that 43.70, which would kind of take care of both things at once.
Sure.
And then we'll have to see what happens. But the fact that we broke this, and looking at the larger cycle and the 81 weeks and all of this, I don't think we're done going down. I think we clicked over. We had a chance here. If we had stopped above the line, we could have recovered and ran up, but we didn't. So therefore, we have to sort of keep our minds open.
In my notes, Barrie, I have both on the NQs and the ES is to watch the counter trends.
Totally. Now we're completely on counter trend mode.
Counter trend mode. Yep.
There's no question. And that's where you can watch your 4 hour. It really comes in handy if you guys are trading short term. So, and we only have really, you know, we had an inside bar yesterday and an upside. So it's not much. And long as it's below 43.70, I'm not really that excited about it. I mean, you guys could probably trade it coming down into 30-minute support or something, going back into that. But right here, we had to move out of the low, and now we're at resistance. So what are you going to do? Now we have to wait to see how 43.70 area settles out. I mean, we went up to 58, so we're not that far.
No.
So that's all I got for the ES. You have anything to add, or?
No, I think that's good coverage. We know the key level, and we are not, bigger picture, we are not out of the woods, people. Watch the counter trends, see where they fail, and that'll tell you.
Yeah, and if you guys want to watch the levels, we have, you know, we post them on Twitter. It's also here, and also Ben updates the spreadsheet. It has all the levels on there. And if you like our work, please, you know, click the likes. It really helps grow the channel.
Yeah.
And the bell and subscribe, all those good things. It keeps us inspired. Let's say.
Let's go to bonds. That had a hell of a day today.
Bonds had a hell of a day. Well, it's been a hell of a week.
Yeah.
So a hell of a year to say.
Oh my God.
But it's perfectly in line with what we were talking about, and we expected it. We called it out. We did everything but put the trade on for you.
Yeah.
Right? I mean,
yeah, pretty much.
You know, we did all of it. So here, I was thinking of the weekly, but here's the, well, it's just going down is what's happening.
And now we're getting stuck below the 90.
Now we're stuck. Very good, because we're stuck. Look, you can see how that, you know, 2 days we bumped up against exactly where the 90 is, you know, 112. We talked about 112 if you guys are watching the bond segment. And if you've been watching the bond segment, you know how bearish we've been, even through these little counter trends, right? Hung in there, and we did get to the target. You know, we were talking about this 110, 109 area.
Yeah, we did.
We got there. So I suppose the question now is, well, you know, now what?
But you know what's amazing, Barrie? There's so many people that want to buy bonds right now.
Yeah, I don't know what they're looking at though, Ben.
I guess they're looking at rates where, you know, 1%, now they're 5%, and it looks like a bargain. I don't know, but I mean, technically they're a mess.
Yeah.
I mean, it's like we talked about last week. It's too late to initiate a short, but it's way too early to buy because we got no signs of a bottom.
Yeah. I don't think the bottoms. Well, what happened was because, well, when I get into the weekly, we'll talk about that.
Yeah.
But here, what I wanted to point out was we're coming up into 135 days next week. So I would like to see what happens if we go lower into the 135. That's 135-day count from the high.
Right.
And I think that would be interesting to watch. I would like to see that and see where we go as far as the price goes. This might be it as far as price goes, but we got to let time burn out a little bit. And we also have a 270 coming up, which is November 6th, not too far away. Actually, a month away. That's not too far in chart terms. And if we can make a low to low 270, that's very powerful in bonds. Actually, in a lot of markets. So there's definitely downside left. And the reason I say that is because the 90 didn't hold.
Right.
And if we go to, so for next week, if you guys going to watch anything, I would watch the 112 because that's really where the 90 is, you know. So if we're below that, I would consider it to be a little bit softer. And if we get above that, yeah, maybe we'll get some traction because we do have this trend line that we could go up and tap. So any kind of down trend is fair game here.
Yeah, and the intermarket flows too, Barrie. You know, we could get a relief rally in bonds and a relief rally in stocks, and both of them could still remain bearish, go up into resistance, and fail. Absolutely. And that's a real possibility.
Well, till these square out, you know, we really can't even call any kind of a low.
Let's look at the
how
weekly.
we do things, you know, this is
Right.
how we do it. So, and here's
your weekly.
now that could, you know, we call that a low.
It's possible. Yeah. On the 144. Yep.
For sure. So I think I can add that in later if we start going lower. So weekly is really the better chart for bonds. So because it's the bigger picture, you know, bonds are a little bit slower moving and whatnot. So we had the 114 target from a long time ago.
Mm-hmm.
And that came from this high, 144 down from the high, and we did hit that and we pushed a little below. That's fine. And having the ABCD kind of held and made up for that little bit of extra that we ran. So for now, we're not even above 144. This is the problem here. We don't really have great timing, and we really couldn't get above 144.
Mm-hmm.
So, you know, I can't really call, even though the ABCD completed. So I think basis weekly, you know, I know we talked about 112 for like the really short term, but I think long as we're below 114, we have to call that resistance because that
Mm-hmm.
was the support we were looking at coming off this high.
Coming off that high, yeah.
Right? And when that low came in, I remember calling it out and saying, you know what, we're not done. We're going to come back and take that out and do it, you know, in spades.
Pushed right through.
And if you notice, this is not a false break, right? I mean, a false break would have been yesterday. And today on the news or whatnot, we would have reversed.
Mm-hmm.
However, that would have, you know, panned out, but we didn't. So we got stuck under 144 on a weekly basis. So this is, I would say, somewhat serious,
Mm-hmm.
you know, and so we'll have to treat it that way. So basis daily, 112, watch the short term, but really to get the upside, anything going on the party going on the upside, we have to get about 114. That's just, we'll just leave it at that. You guys can drop trend line here too if you want. That's, which would take months to reach anyway, right? Like that. So that's it for bonds. Anything you want to add?
No, I think you covered it well. Just that, you know, like I said before, it's there's not a good setup to short, but there's certainly not a good setup to go long right now.
No,
and if you don't have a position.
Exactly. And timing wise, we really didn't square out here. So, you know, there's really nothing to talk about. And the square would actually come in around January.
Wow. Oh, wow.
And I would say that's not
unrealistic, huh?
It's not unrealistic and totally possible. And that would, if we rally up in here and come back and really
sure,
that would really give us a low right into that.
Yeah, and 3 drives.
Yeah, yeah, that would do it. So we'll watch that. And so we would have to break through. I mean, a flush would come if we take out 107 to the downside.
Sure.
And that would really shake a lot of things. So, you know,
absolutely.
Going into, if you look at historically, you know, pull out the long-term chart coming into, so 106 or so, we're talking, you know, right in here where that support was back in 2007. So using the square 90, I think we did before maybe 7 cycles up into here. So I would expect at least 3 cycles coming down. I mean, that would put us into the latter part of next year, but even if you 2.5 cycles, that would get us in January. So yeah, I don't think bonds are done.
No.
So we'll just stay on it. And not much else to add to that.
I agree on that one.
Next we got, here's a winner. No, yeah. Here we go.
Look at that low, beautiful.
Perfect everywhere.
Just beautiful.
And so here we, you know, we had 91 as a target from forever, from when we were consolidating down here, came up into it. And then we had the ABCD. We were looking for that somewhere between, you know, the 60 up, 97 and the ABCD to be the target. Well, we were a little bit short, but we knew the leg was ended. You know, we knew that we ran it up. We did the, so last week we were talking about how expect some kind of a correction, but I really didn't quite expect this.
Not straight like that.
Not so straight, but you know, what do you know? And look where he stopped. Exactly.
Yep.
The 50% of the square, you guys. So this is why we use these things, just because they work.
And I'm looking at my 4 hour too, Barry. We did an ABCD down. If you drop down, I don't know if you have it up, but if someone wants to drop down to a 4 hour, that straight down leg shows an ABCD down.
ABCD. Okay, okay. That
Yeah.
could be. No, I don't have 4 hour here.
Just check your 4 hours out at home and you'll see.
And you can see we really tried to push above the upper channel, couldn't do it. And once that reversed, really, I mean, it reversed and took out 91 pretty much within 2 days, right? So that's what you want to watch for. And the 4 hour setup right there between those 2 days. So what's up for next week? Same story, guys. If the 81 level holds, which is right at the right around the 50% level of the square of 60. I switched to 60 because the move was about 60. I was using 90 off of this low, but I think this is better for now because we have a tighter range in here.
Right.
So I think long as we're above 81, 83, 81, 83, I think we could probably have a shot at consolidating up here or moving higher. But there we go. But if we slip under that, well, I think we have a little bit of room and a lot more weakness, maybe slow motion, but maybe not as fast.
Right.
But there's a lot more space here to correct.
Then it goes back to that key 73 area, right?
Yeah, the 73.50. So for now, the key number to watch is this 81 to 83 level where this box is. And we'll see what happens. I mean, technically, this is really great support because if you look back, where this should hold. So I'm thinking this should hold, and this was some kind of a panic. So if you're looking to buy stuff, if it sets up, great. So now you know where to watch. If it gets under that, just wait for the next support level to kick in, which is not very close. And we'll look at that next week, obviously. You have 78, which is a long time favorite number. That's basically the low we had in August.
Sure.
Looking at weekly crude, well, we were talking about how many weeks it's been going up and how it's getting ready for correction. Last
back in the box.
Back in the box, and it's not like we didn't see it. And the other
look at that timing. Nice.
Yeah, I wanted to show you.
Yeah.
The reason we were calling, I mean, we don't have time to go through everything that we see, but so last week, the reason we were looking for this to end somehow is, we did have 180 going sort of low to high. It's a lower high, but still. And the high came in also right in there. So it's pretty good. I think we can, fairly reliable. So what should it do? Well, the box is really the key. We want to hold it. Ideally, if really there's a lot more left in the oil, we should hold about the 79 lower boundary of the box. And we'll see. We'll see how that goes. For now, there's not much till we get down to the 79. So we got 79, 81, 83, right? That's kind of how the levels stack up.
In that range, yeah.
In that range. So we got, 81, 83, 79 is
right in there.
Right in there. So that looks like the area for it to stop. But the other one's based weekly, so we don't have to get down there. Daily might be able to hold it here. All depends on strength. So see how that goes. Next, we have gold.
Very interesting gold.
Very interesting and perfectly behaving very well. We had, I changed the thing to a 60 count. Square 60 just to make it easier. So the main thing in gold was last week we talked about, 1887 giving out would take us down to 1814 being the next support level. And then we had this ABCD drawn out. Well, we got right to the ABCD and the big old outside reversal.
Nice outside reversal bar today. So
that's something to be respected, I guess. And we're about 60 degrees down from the high, and the square looks pretty valid. So I would say if this is gonna, if this is we're gonna get a bounce out of this, we really need to get above this 1846, which is 60 degrees down from the high, 1846. And somehow we get trapped between under 1846. Of course, if you consolidate right around 1814, or maybe even come back and tap it. But being that the ABCD complete is so clean, and the fact that we got a really nice outside reversal out of it, I'm thinking we should probably follow through and get above this 1846
46. Yeah.
area. That's it for gold. But clearly, it's still not a buy signal, but we just know the downside ended is kind of how we're looking at it.
Yeah, that I agree. It's again back to that discussion. First thing is, did a leg end or did this move end? And then we don't know what comes next, but on a 4-hour basis, we did 72 by 72 at that low.
Right.
In gold. So that's a nice.
And so the same ABCD is on the weekly. So here it sure looks like something, and it
yep.
Right in here, right? Filled up the ABCD perfectly.
Yes.
Just one bar off, man, and that's pretty good for ABCDs, filling it out like that.
Yes, it is.
But now the problem is, obviously we got this 1881 above us now. We got plenty of air between those, so it's possible that we consolidate here. And like all ABCDs, if we take out the low of this week, then we can expect further weakness, most likely.
Sure.
So that's what's happening on gold. Moving on to copper, another hit, 354.
Oh man, it's holding like a champ, isn't it?
I wish that I remember how I got that damn number now, because I really can't remember, because when I work these, I work the whole chart and I add the numbers. I forget to make notes sometimes.
Right.
Whatever it is, you can see it's been holding since the day, back last year. It's really solid.
A year it's been holding, essentially.
Yeah. And good solid test. So last week we were talking about how it's weak because we broke the lower trend line. We got under, over here we got under
the half square.
And we talked about how, long as we're below that, it's in a weak position. And sure enough, with this little ABCD right into 354. And it's a respectable number. So I'm expecting it to hold. And for copper to sort of consolidate in this area. And depending on how the pattern looks, lower highs, higher lows kind of thing. If we can continue to make higher lows, we can expect it to take the next leg up. But for now, I don't, we have to sort of wait, since we only tapped it this week. It hasn't had enough time. So this 50% square we've been using, if we can at least get on top of that, that would be something. And that's around, let's say, 366. Okay.
Mm-hmm.
It's that. Let's take a look at the weekly. Weekly, well, as soon as we slipped through this, we knew it wasn't that good of an idea. Talking about anything long. But we were open to the fact that it could consolidate above the 90 degrees, which would be like 336. And we also had this ABCD potentially could get hit. So I think this is in motion. I think you can take your trades off the key levels, and the key levels would have to go back to the daily. So for now, weekly is still in a weak position, even though they bought it up today. And I think the long side could be somewhat entertained about 366. Since we held here, making higher lows. Otherwise, we can see this other trend line coming down. So you can see right there. We're well established in a downtrend.
And it's still coiling too. If you look at,
coiling. I mean, this overall is bullish. It's just, we have to live through these consolidations and sentiment.
Exactly.
Recollections people go through. Dollar behaved fairly well. We had, last week I remember saying 107.25 is the target.
Look at that.
Look at that. Bam.
Beautiful.
107.25 right to it. And we pulled back to the box. So, dollar strength has been amazing. And if we're going to keep it amazing, I think, holding about this 105.5 would be the key here. After all that work and getting on top of it, holding above this, all of that, I think I'm expecting it to hold about 550. And if it does that, we can consolidate a little bit. It might get a little dirty in here around the 72. But if it holds, then we can expect higher prices. Anything you want to add there, Ben?
No, just that this pullback is going to tell us a lot. If we cannot hold that square 72, then we'll see some real dollar weakness.
Yeah, I think 550 is the key level, and we have a trend line almost pretty much there, so we can hold. I mean, I think the trendy part of it's done. Now is what kind of consolidation we're going to get, the counter trend. So I mean, before we had like this is like a 2-day counter trend, 1-day counter trend, 2-day counter trend. So it's been really strong. Can't say anything negative about that. Take a quick look weekly. Weekly ran up into, well, we had 106.75 basis weekly. We ran up right into that area, turned around. We got under the 50% of the square. So not much. I think the take home thing here is that we had a nice run. Now we're going to have to expect some kind of a consolidation counter trend. We'll just leave it at that. I mean, you don't want to mess up a good time by rushing too fast.
Right. No, that's right.
So we had a good run. Let's just write it out. All right, let's move on to the euro.
Bit of a reversal today.
A little bit of a reversal. Yep. But still in the,
in a downtrend.
Still in the downtrend. But this low came in, this is like a key support level, and the low came in, looks like 72, right about 90. So just want to look at that. I mean, that would have squared out 90 by 270, from the low, right in there. So we came, it was close enough. So I would say we had a decent move, almost 90 degrees from the high. And some kind of a larger correction wouldn't be out of the question. Have you noticed how we're getting these in a lot of different?
Yep.
A lot of different things. So looks like we finished that leg, and now we're turning into some kind of a correction. So what we know for sure is this leg might be done by now. So watch here. We talked about that last week. We're getting close because these trends start to run a little long on the tooth, and you got to be careful.
If you take it from the higher low, it's probably right on the 90, huh?
From here?
Yeah.
But yeah, I think, we might be a little bit over, but yeah, it's close. But,
in the neighborhood.
But yeah, and no matter how you go, it's in the neighborhood. So we don't want to right in there, or we can go.
Or there, yeah.
There it goes. So yeah, 270 low to low. I think it's close enough. Either way, watch your shorts. That's the main thing.
Yes.
It's not quite time to get long, but definitely watch your shorts. And that's it. Basically, here, all I have to say is that we covered I think the down leg has hit some kind of support. So we'll leave it at that. And we'll wait for next week to figure out how we can turn around. And on the weekly, we did about a half a square. If you take this box. So you can see we came down about a half up to 72. So this would have been about 45. It's pretty much, because it's scaled the same way. It's pretty much the same distance. So 50% comes right into here. So I think the leg is done. And I would like to look at 108. This was the number we were using a while back. 108 is really the resistance now. So we do have a little ways to go to get up there. So, and the other side of the and the other side of the coin is, as long as we're below 108, the downtrend is in full force. So, so I think the block between 108 and the 50% of the square really is kind of where we could be consolidating for now. Okay, so we'll leave it at that. And that's the weekly. Let's get back to the daily. You got to be covering.
Oh yeah, we'll be talking today about.
Yeah.
And woke up from the slumber. Right? Yeah, fantastic.
And last week we talked about how this is starting to wake up, and you better keep an eye on it.
You better watch it.
And Hang Seng, not much. We're definitely weak. Almost got down to the target. We have an ABCD right there. Almost got down there. So we might have hit that. But long as we're below 18,054, which is 72 down from the high, it's really kind of weak. So I'll leave it at that. This one I want to talk about. This is the Dow. And look, this, look at that. I don't know. I think I posted this chart on X, but I haven't really, we don't really normally look at this, but I wanted to show you, I was looking at, are other markets showing any kind of support? And this 33,000 I've had in there for a while
Mm-hmm.
as a potential target. And here we are. We hit it this week and we managed to get above this 33, let's say 280, 33,280, and we're on the upside of the square. So I think long as we're above, now that we hit the target, above this 3380, 33,280 level, this 34,450 might not be, too far. And it's possible. And also I would consider the Dow to be weaker in the big picture, as long as we're below 3450. Okay.
Mm-hmm.
You have to remember that. And we'll see how things play out. But I wanted to talk about that fact that we did have some support here. So we think the down leg might be flushed out for now.
It's really interesting how many markets, because I'm thinking of the commodities, how many markets where the review you did and the things I've seen, a lot of markets showed a leg ending.
Yeah, exactly.
Something ended this week.
Mm-hmm. And there you go. That's it.
Yeah.
That's all I got. Let me put it back to you. Cover through
Okay.
all commodities and Bitcoin and NASDAQ and the rest.
Good job on the coverage.
Hey, thanks.
Very illuminating.
Well, we I'm glad we were forced to look at these every week.
That's right. So there's Bitcoin. It's banging up against the ceiling.
And I see that little triangle there.
Yep.
Looking a little suspicious.
Yeah. Like it's about to do something, right?
Yep. I mean, the perfect thing would be a false break to the upside.
Right. Come up here.
Yeah. And then
fail to stay on top of the full square and then roll over.
Mm-hmm.
Still muted action, which is really interesting to me. Like, gold caught the bid today, silver caught a bid today, and this thing is just stuck in this little triangle. But we'll see. As I said last week, if we can't get above the full square, there's going to be pressure on it. If we can't get below the half square, there's going to be support. So we're just, and it's even tighter now than the half square. We're stuck in about a quarter square. Yeah, if we go from here to the full square up top, it's just a quarter of a square. So we're really winding up. Wait for the break of this quarter square. On the downside, you're looking at like 26,770, and the upside, you're looking at the full square, which is right just slightly under 29,000.
Yep. Okay.
Those are the key markers. Let's jump over to the NASDAQ and then we'll talk about the commodities. So I think this is a sort of a good visual of what's happening in a lot of markets. So we had this down move since that high in late July, right? And now we got a little higher low and now we're pushing up. But look at all the overhead we got to deal with now. We got the underside of this uptrend line that was broken, that's going to be pretty close. Then we've got the harmonic balance point. Then we've got the full square. And we've got all this price action here we got to deal with. So does that mean we can't rally or we're not going to rally? I think we could rally because we're above, we made it back up, closed above this half square. So we could rally, but you're going to, is it a rally to nowhere? Are we just rallying into this resistance, this over here for the next 2 to 3 weeks, burning off time before we get the big rollover? What would change my mind? We get above and clear this full square, 15,570 area. Got to get above that to turn this thing bullish. And on the weekly, just to reinforce that it might be the ride to nowhere, we're just still in this triangle, right? Came down to the support. Now we're going to bounce back up into this half square resistance or this trend line here. Probably. I mean, to me, that's what it seems like odds favor. How about you, Barrie? What's your view on this?
Here we're coming up from below to kiss the line again.
Mm-hmm.
So, I mean, that's usually fairly decent resistance. So this might be a 1 or 2 day pop. Just looking at this, if I had to take a shot at, I had to make a call.
Right.
So let's see. I think long as that trend line, we're that close to it from kissing it, it's negative. I can't think of it being positive.
It's
Unless
suspect.
we really break the pattern, we have to, what would have to happen is we pop above it, above the line, and any kind of a correction we hold above the 50%. I mean, that would set it up to the upside. Your dashed line, wherever that is.
Yeah. This half square support.
Yeah.
That was resistance last week, 14,955, and now we popped back above it. So holding above that would, maybe lock us into this half square chop for a few weeks, but we'll see.
Yeah.
Again, to be bullish, it's got to get above the full square for me up here.
Yep.
So we'll see. We'll see what it can do. On the commodity side, the grains, there is some life in the grains, corn especially. We've got a higher low on a daily, a higher low on a 4-hour. Just need to see a higher high, and we need to clear a full square on the daily, but that has some work to do. Wheat and soybeans are still in a bottoming process, so not much there. We're going to talk about the sugar and the cocoa shorts. Coffee's still trying to hammer out its bottom. Cotton is still sideways, but we're going to get to one of our sideways stepchildren, nat gas, which is why you got to pay attention to cotton, because wait till you see what nat gas did if you didn't notice. And Barrie talked about gold, which I think gold completed something, and something bullish is starting there. The one I want to go to first is silver, and show you it looks similar to gold, but even has nice half square support in here. So we did a little ABCD down here, banged around the bottom all week, and then today we got a nice push higher to give us a good sign. As long as we hold this half square, we have an ending here. What are we going to do? It's possible we could rally just right up into this full square resistance, which is around 2272. But if it's really bullish, it's going to push through that and sit on top. And you can see longer term, if you look back, the higher lows are appearing. September 22, October 22, March of 23, and now this cluster here in October of 23. So that, again, it may not seem like a big deal, but it is a big deal. Higher lows, as I showed you on that ES 30-minute chart in the opening, they signal aggressive buying, like buyers are stepping up at a higher level than they previously did. So the key thing here, we got to hold this half square, hold these lows that we made this week, and then we got to come up here and get on top of this full square. If we do that, then we know we've got the end of this leg here, and now we've got a bullish leg starting, and not just some. I mean, if we bang around here between the half square and the full square and stay below it, that's not going to be bullish. So those are the caveats on silver, but I do like the way it looks on a weekly basis. What did I want to show you on the weekly? This is interesting because we see this so many times, and we pointed out on the show. So this thing likes to do ABCD corrections. You can see there was a big one off of the high we made in 2021, right? Big ABCD correction. Here's another ABCD correction on a weekly basis. And look where the weekly close is, Barrie, right above this half square. 2170 is the half square. We closed at 2173. As long as we stay on top of that, look, basically all week it rejected all the prices down here below the half square, right? It got bought up and we closed right on top of it. So as long as we settle on top of that on a weekly basis, we can say this ended, and now let's figure out what's starting next in the next leg on silver. Anything else to add, Barrie? Anything you want to comment on this one?
Well, just that silver going from the low, we could call it September low in 22, going up into this high was 72 degrees. It was a 72-degree move. And this correction, and my 50% of that 72, which would be 36, is right around 21, let's say $22.
Okay.
And so in my book, we have to get above that. If we can get above 22, then I think we can be set for some kind of a, positive move. But if we're stuck below 22, it might take a little longer.
Agreed. One of the other reasons why this half square is so important, look to the left.
Mm-hmm.
Look back in 2022 where these highs came in. Here. This is where the lows came in. Here.
Yep.
This battle right here earlier this year.
Yeah.
Pretty important spot.
Yeah, that area is important. Yep.
So let's see if it can hold. Otherwise, put it on our radar, watch it. It's made some positive moves this week.
Mm-hmm.
Let's go to our couple of shorts and update what's going on there. Sugar. So we did an ABCD down right into this former trend line resistance, and now it became support. Had a nice bounce up today. So what am I watching here now? Like we were saying during Barrie's segment, it's time to watch counter trends. We want to watch this counter trend on sugar. Ideally, we top out below this half square.
Yeah.
If we top out here, we could say, okay, this was the first wave down. We've gotten the counter trend up. We have a lower high in place, and potentially we catch a waterfall move like this, a third, something like that.
Yep.
So we watch
if ABCD come in, so keep that in mind.
Got to keep that in mind. We definitely, the first pullback ended. Now it's where does this next counter trend go?
Yeah.
If we charge above and we sit on top of this half square, got to keep your shorts on in your pocket, right? No, don't deploy them, because if we sit on top of this, then we're going to challenge this high.
Yeah.
Potentially make another high. So the next couple of days, let's watch this. The key level here is 26.91. So call it, $26.90 to $27, somewhere in here.
Well, technically that pivot at C of the ABCD, that's
right there,
taken out,
which is 27.10. Yep. 27.10. So that's why, we watch counter trends. We watch that first move down, then we watch the counter trend to see if we can get the setup to catch the, the fast move down in a potential third. So that's that one. Let's go look at our other short. Anything else you want to add on sugar, Barrie?
Well, something funny, I saw some headline yesterday somewhere about how, the bull market in sugar. And anytime I see that, I'm like, well, that might be it. Give it a few days and we'll start coming back down again. It might mark the high. You know how they do that headline.
Yeah.
So I saw that and I kind of know, I remembered it, when you were talking about here. So we'll see how it goes.
They're trying to create exit liquidity, right?
Well, always. It just happens. It's not even a joke. It's real.
It's not. Yeah.
I've seen it enough times, and it's it's
it
real.
is a real phenomenon. All right, let's look at cocoa. So cocoa here, I think we finished our first leg, because when I went down on the daily, we did 45 down, and on the on a 4 hour, we did 90 by 45 square. So I think this is a decent low, and it came in on half square support. So just like with sugar, we had a decent move off of it too. We want to see, where does this next counter trend end? Ideally, we get stuck below the full square. If we make a lower high up in here, it won't be as exciting, but it's still good. So like sugar, I want to watch the counter trends here, see if it struggles at this full square. Getting stuck under here would be fantastic. Right? It would be a very weak counter trend, and it would also be, give you something really nice to sell against. So that's the status of cocoa. We're watching a lot like sugar, a lot like, several of the other markets that Barrie reviewed. We want to see what happens in the counter trend. It's pretty clear that something ended here. This first leg down ended. Now we want to see where the next pullback stops.
And I have 35.42 as really, long as we're below that, it's on the weaker side. It's on a weaker.
And guess where that is?
Where is that?
Full square.
Right there. Okay. All right. Well, what happened was from the higher low in October, we are up 180 degrees was the high,
Yep.
okay, that we had. And so the pullback was 50% of that square. We pulled back 45 degrees. That's where your dotted line is. That's exactly
right.
That's where that was. So now, yeah, we're right there. So we're pretty much have the same chart for that. So
Yeah, we're really close.
we're
on
in that
that.
upper that square that is done.
Again, we get stuck under here. That's the fat pitch that
Mhm.
you want to swing at.
Yeah.
So we're watching. This is the right. You identify like the theme of this show, I think, is because we're finding them everywhere. Is identifying that something ends here, a leg ends here, and now it's identifying and deciphering what
Counter
is
trend.
coming next.
Yeah.
What does this counter trend look like?
Mhm.
You know, is it going to blast off to a new high? Right. Well, how are we going to know that? If we get on top of this, good chance that's going to happen because that means it's going to be pulled up to here minimum.
Right.
And normally, market won't retrace that much if it's bearish.
Mhm.
So that's why we watch these things and pay close attention. All right, the last one, Barrie, is one of the former sleeping giants, which woke up with a vengeance this week.
It's our favorite.
And that's natural gas.
Yep.
Up 7% yesterday. Let's see, what did we close today? Today we closed up over 5%. So 12% in 2 days. And this is what, but this is what happens when you come out of these bases, right? When you get these big bases and you get a breakout.
Mhm.
And it's interesting. One of the followers actually said, I was traveling Monday, Tuesday, but he actually said, hey, we held that 282. Is it finally going to happen?
Mhm.
And prophetically, there you go. And the moves like this are why I like to get in, when I start seeing the higher lows and higher highs. I do. I like to get in because I hate to chase.
Yeah.
I'm just not the buy high, sell higher type of guy. But that's why I like to get in here, even though it's really frustrating and it's, it tests your nerve and it tests your resolve and it tests your belief in the pattern. When you see this sort of pattern develop where you've got the higher lows and the higher highs, and then you get that key level, which Barrie and I have been talking about probably for months now, is we need to clear 282 to really feel good about this thing, moving.
Right.
Got above it there, didn't clear it. 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 Nudged above it there, didn't clear it. Here's where we started clearing. And then look what happens.
All right. So where's that 50% there?
So the target, which I told everybody earlier in the week after we saw the breakout here, was 342 is the half square. We almost made it today. The other thing I wanted to show you guys is the weekly. The full square here is 366. So bigger picture, that's the target right here. And you can see that was a low on the way up. So there'll be decent resistance at 366 weekly basis. But the daily looks good. If you struggled through it here, enjoy the ride. It's bullish. This kind of vertical move. Again, we want the key thing is on any pullbacks you want to hold. I'd say this level here now, which is 1/8 above the full square, like around 296, 297 would be really bullish. It would continue to be bullish holding the 282, but last 2 days are very encouraging that the energy that was built up in this sideways is starting to dissipate and be expressed in prices going higher. Anything else you want to add, Barrie, with moves like this? How you make sure you ride it and stay in the if you suffer through the sideways, you got to benefit when it goes.
Right. Well, depends how you're trading it. If you're doing options, is one way. If you're doing positions, is another way. And us little guys aren't always doing big positions. So option wise, well, you got to take them when you get the hit, when you get the move. Like this week, you definitely want to take those profits, even if it's close, gets close enough to the target. But if you have positions, then you're moving up your stops and you're waiting. You're okay. You got established at very good levels, so there's no stress, less risk. Every time it goes up one tick, you got that much less risk. So I think if you entered right above the square where we talked about, and where we triangulate a little bit, reverse triangle, end of September, if we got in those areas, you're in really good shape now because we got plenty of space. So,
and it's moving.
Yeah, of course, yeah.
And this is what we wait for. So
now we have what you call breathing room.
yeah.
And you can exhale.
Yeah, and enjoy the ride. And that's the idea, is to get in, in a position that has the odds in its favor of making this kind of move.
Absolutely.
And it's not easy, and it's not, you can't do it to the tick, but you can certainly get yourself in with a favorable risk reward ratio in time to participate in these kinds of moves. I think I want to end, Barrie, on a topic that I think is very timely, which is when you see a lot of moves ending, like we're seeing this week in disparate markets too. It's not like it's all just in the stock markets or it's all just in a certain sector of commodities. It's across different markets. We're seeing signals of moves having ended and now something else is coming. What do you stay alert to? What do you focus on? So like, what are you going to be looking at this week, given all the different markets we've seen where there's a high probability a leg is ended?
Well, it for me, it sort of goes in phases, because a leg is ended is not like a light switch. It doesn't turn on a dime. So we kind of anticipate these things. If you guys watch our show over the weeks, we'll anticipate something, we'll confirm it, then we wait to confirm it again on the other side. So it's a bit of a process. So you can almost look at it as check boxes. And last week, I think you guys will remember us talking about, hey, a lot of things ended. Isn't it interesting? It was with full moon and end of the quarter, right? We talked about all of that. So we were anticipating that, the leg has ended. That's how we look at it. We look at our work, we look at the squares, we look at the cycles, and you kind of try to get it like a net assessment. And this week we were watching for evidence. It's okay. So we have we came to some conclusion about things based on probability. So now we want to see, well, is it moving in accordance with that?
In other words, if it's bullish, is it making higher lows and higher highs? And if it's bearish, is it making lower lows and lower highs?
Absolutely. And on a daily basis, you're looking for these patterns, like these outside reversals to come in. And they all add to the mix.
And to talk about the squares, we're looking, does it get stuck above? Does it sit on top, or does it get stuck below?
Absolutely.
That's markers for us.
Key markers. And the thing is, as we anticipate, it's nice to see the evidence start coming in, and you're just kind of collecting the coins. And so that's the middle part. And then now a lot of the things we talked about, the main thing we left with, well, it needs to get above that, or it needs to hold above this. It needs to stay below that. So we have these key levels we watch to see, sort of like tipping points. If it gets above that, well, then the momentum is going to tip the one way. If it gets below that, stays below, then momentum stays tipped the other way. And from there on is when we trade. If it tips above a certain point, well, okay, we start trading in that direction, just like we did in natural gas. Once it shifted, in this case, we can say once it got above your harmonic balance point, basically, we were saying, hey, it's starting to tip, because the lows came in. We talked about the lows, and a lot of times, this is natural gas is classic. Low comes in, we expect the entire trend to change the next day and start rallying every day.
Right?
Never works like that.
No.
And commodities and things, some stocks, it could take so many days before the low is really cemented in. And I think this natural gas is a great example of that.
This is months of sideways.
Months of cementing it in. Yep, we got the low put in, and then we sort of cleared above the square. So we're looking for all of that, and all of that is evidence. And at some point in your mind, I mean, the way our neural network works, we're looking at that, and we know, just by, you can feel it in the body, you can kind of know your intuitive take on it. Well, it shifted, the balance shifted, because nobody's going to come and tell you, tap you on the shoulder. So you have to kind of have enough experience to see it. And if you've seen these patterns enough, then well, it's most probable there's a higher probability of it shifting than not. Yeah.
Right.
So at that point, that's when you start picking up the trades on the other side. That's how I kind of do it. So
yeah, and I think to corroborate what you're saying, for me, it's now that these legs have ended and there's good evidence that it has, my focus is on, okay, what's the evidence telling me is most likely to happen next? And we got to start picking up all these pieces of evidence from price action, going forward, now that potential corner is in place.
Yeah, well, the next thing, I mean, like Gann, for example, all the famous calls he made, but he spent most of his life trading just the counter trends, especially as he got older. He wasn't trading corners like most people think he was doing. He was really trading the counter trend. And if you look at his charts, that's why he has like a million lines, because he's looking to see, is he going to end here? Is it going to end there? So he's got all these different points. Most of it's really to figure out where the counter trend will stall.
So he can catch that potential third type of leg.
Third, or whatever the next leg is. I mean,
right.
We can have something that's going on for years, being a negative, being a downtrend or uptrend. So you want to catch all of those. And if it slips through, you wait for one to hold, then you do your calculations. And so it's a very systematic sort of way. And that's, I can't think of another way to do it
right.
other than that. So in this case, now that whatever ended, now we're looking at the other end to see, well, let's look at where the counter trends will end. If that's the case. Now, for natural gas, for example, now we're looking to see, well, where would the pullbacks end reasonably, right? That's it, because we don't have an upside target yet. It hasn't really hit. Even that half square is like nothing compared to where this
thing could go. Yeah.
So it's not like as soon as you get to half square, we're all bearish again.
Right.
What happens is we're just watching the trend, and you try to isolate the counter trends. That's the whole trick, guys. The whole thing is isolating counter trends on the way up or down, and in between you try to isolate the corner. That's it. That's all of trading, like 15 seconds.
Right. That's true. And what we reviewed today in two of the commodity shorts was, we're just looking at the counter trends now. Where are they going to end? Where can we get a reasonably good estimate and probability that, okay, this pullback back up higher has ended, and now the next leg down is starting? And that's exactly what we're doing. What you described is exactly what we're trying to do in those two markets.
Right. That's it.
So anyway, that was a great show, Barrie. I really,
it was a good
I really
topic.
thought the review was good, especially in light of the fact that we did see a lot of legs ending in many different markets. So, we'll be focusing, as he said, we'll be focusing on the counter trends this week to see if we can get decent setups for entries into both long and short in many different markets. So I know it felt like a long week, but Sunday night will be here before we know it, when the futures open. Anything else you want to add before we finish up for today?
No, that's it. I think, we're good. I just want to remind everyone to click the likes and share, and maybe subscribe to us. And the other, well, there's kind of an announcement. Ben and I talked today about doing an educational series, because I think we have enough people watching and asking a lot of questions about how to do it and whatnot. So I think a good, well-rounded educational series based on the methods that we use might be in the works. So that would be early next year if that gets published.
Fantastic.
Yeah.
Well, have a great week, everybody. Barrie, great show, and thanks a lot. We'll talk to you soon.
Good job, Ben. We'll talk to you soon. Bye-bye.
Thanks. Bye.